Alright, y'all, so here we are on gold, and we're going to keep this video short and sweet, and yeah, we're just going to go ahead and get into it. So here we are on gold. Today is Thursday, October 6th, 2022, and right now I'm going to be back testing on gold, as I stated earlier in the video. So just going to do a quick market review of if I would have traded today. Just gonna be back testing, just a quick market review of if I would have been trading today, what I would have been looking for in the gold market as of right now. One thing that I want to draw y'all attention to is that something real quick is that historically, gold tends to fall in price when interest rates are being hiked up or when interest rates are rising. And I want to point your attention to a article right here from Bloomberg. I got this article from Forex Factory. You can look at the different articles, click the links, it'll take you to these pages. Right here, as you can see, the Fed is planning to raise rates despite all of the volatility that's been going on in the market, right? Because they're trying to combat against inflation. They're trying to slow down the pace of inflation. And right now, throughout the year of 2022, the efforts that they've been putting into it really haven't been, I want to say, what's the word I'm looking for? Not beneficial, but hasn't been showing the results that they were anticipating. So they're basically being forced to, they basically feel like or think that in order to further slow or to help combat against inflation, that they need to keep raising rates, and they're projected to keep doing this into 2023. So what that means is that with knowing this information, I'm basically going to be looking for more often than not short opportunities on gold, right? Whenever they present themselves. As far as a long-term bias goes on gold, I'm gonna be looking for short opportunities. You see right here, I had an area marked. This is right now on the monthly time frame. If I go down to the weekly, you'll see there's an area I have marked right there, and as you can see, gold came to that area and actually reacted off of it. Because that's a key supply area right here. It's just a key supply, or you can also call it a discount area right here. So an area of discount, you can anticipate to see higher prices because, or you can see reactions. You see reactions to higher prices because at discount levels, everything's basically cheaper. Everything is cheap, so it makes sense to buy it up, right, at a cheaper price. So when you go up to sell it at a premium level, you're making more money off of the sell from buying at these premium prices right here, which is what the central banks and financial institutions oftentimes do in the market. So with that being said, now we are in the so starting on the monthly time frames, you can see right here, have different levels marked out. These are some premium levels of demand that I have marked out. Then I have some discount levels of supply marked right here. Now, what I said earlier about the interest rate hikes and everything of the sort, they're projected to do going into 2023. With that being said, my bias long term is going short, potentially down into this area right here of weekly liquidity that's resting down here. So I'm anticipating either reaction here to head lower, or possibly a reaction up here in this area and then heading lower, right? But overall, long term, until something changes, like we start seeing price head above these areas and closing above these areas right here, this is where I'm looking. This is where my market sentiment rests right now, heading down to these price levels here into the 1572 and 1455 range. That's where I'm anticipating the market to head to. So, but let's get further into it. Keep going. So on the monthly time frame, you see I have these levels marked out here. This is my sentiment down here in this range. Go down to the weekly time frame. You see we have a bit more data that we can look at. And you see right here, that's that area that I have marked, that area of discount that I had right here, which is also, not only is this an area of discount, this is also a bullish order block that finally got tapped into over a course of like, let's say a couple months. Over a course of a year. Right, over the course of a year, this bullish order block right here that was made 2 years ago, actually, from March 2020 all the way to September 2022. It finally came and tapped into this bullish order block that was made 2 years ago on the weekly time frame. So as you can see, just like I said earlier, it came to this area and reacted, right? Reacted in the area and headed higher, right? Because this is a area of discount, right? The big banks and institutions, they look to buy at areas of discount or supply, and they look to sell at areas of premium or demand, right? So we got that established. Potentially looking for other areas up here as far as the weekly time frame goes. Probably seeing it heading higher to tap into this. Well, we have a fair value gap right here, right on the weekly time frame. So we're probably anticipating it to hit here, right? If it heads there, cool. If it doesn't, then hey, like I said, my sentiment is, my overall direction or my anticipation is for it to head lower into this area here, right? So as far as this weekly candle goes right here, we haven't seen a close above what is actually a bearish order block right here. So we can see it's tapping into the area right now, right? It's tapping into this area, but it hasn't necessarily closed above it just yet, right? So the only way I'm looking for something to the buy side area, or looking up towards this area right here, I have to see a candle or weekly candle close above this area right here, preferably above the wicks. If not, closing above the candle bodies is fine too. And then this would be my next area of interest. But until then, until the week is over, which is tomorrow actually, Friday the 7th. So until this week is over and next week start, then I'll determine like what's the best direction for me to look in, or where the market is gonna go. So that's on the weekly time frame. Now we go down to the daily, right? And on the daily time frame, you can see right here, I had the buy side liquidity marked, and then we had the sell side liquidity marked. So you can see right here, price came, took out the sell side liquidity, and also not only did it take out the sell side liquidity here, but it also tapped into this weekly bullish order block, this 2-year weekly bullish order block, right? That took 2 years to form. So it came, took out the sell side liquidity, and headed higher, right? Now when I see this, I'm already anticipating the market to head higher and do what? Take out the buy side liquidity that's resting here, right? So it's kind of like it's moving in a pattern. Whenever the market comes and takes the sell side liquidity and taps into like an area of interest, right? In this case, it took out the sell side and tapped into an area of interest. My next target area, or where I'm anticipating the market to head to, is not only taking out the buy side liquidity, but heading up to this level and possibly coming up and tapping into some type of area of interest, or like a area of premium level, right, of price. So that's exactly what happened here. Sell side, area of interest, head higher, buy side to another area of interest, right? So anything can happen from here. You can either head higher and tap into other areas of interest. This is that fair value gap that was on a weekly time frame. It looks different on the daily, but you know, this is still an area of interest right here, possibly right here into this order block, this bearish order block right here. So area of interest on the daily time frame, right? But until we see some price action heading up above this area here, then we won't focus on this area really, right? It's not about guessing which area it's going to go to and react off of. It's just about analyzing and seeing what happens. So like if it heads here, then we would look for an opportunity or reaction to head lower, right? If it breaks above this, then we will look for the next area of interest. But until then, I'm not focused on anything up here until we get here first and see what happens here, right? So That's on the daily time frame. Now we're gonna go down to the 1 hour. Right, you can see right here on the 1 hour. All right, there's more price action going on. We got a lot more data that we can work with. As you can see right here, we formed some sell side liquidity resting right here. There's some sell side liquidity right here. I'll mark that sell side. So we got sell side, and then we got buy side resting above here. Oop. All right, then we got buy side resting above here. And so now, remember what I said earlier. So in this case, price came, here's the sell side liquidity. It headed higher and took out the buy side liquidity right here into what? An area of interest. This is a bearish order block resting right here. All right, so this is a bearish order block resting right here. All right, so price came, took out the buy side liquidity, and then tapped into an area of interest. In this case, this is a bearish order block. I'm actually gonna make this a different color so it can, like, you know, look better with all the different colors going on. But you can see right here, tap into an area of interest. And now what is it doing? Heading lower. So with this being said, I'm anticipating what? For it to take out the sell side or tap into the sell side again, right? And what's the market doing on this Thursday? Heading lower, heading for that sell side liquidity, or these lows that are equal lows that are resting right here. And as you can see, that's what price action is doing right now. So now with that being said, as you can see, there's a fair value gap here on the 1 hour time frame that you could have took, but I don't normally trade on the 1 hour. I normally scalp. Scalping is better for me. But as far as like a day trade goes, yeah, this could definitely be a possible entry. I want to say this would have been like a what? If the risk to reward would have lined up, you know, but then again, being on the hourly, you target the higher time frame structures, so probably an area down here, maybe a 1 to 2, but that's not what we're here for. So with that being said, now we go down to the 15-minute, and this is where I'm looking to actually take my entries and also use the Asian session range. I'll do another video about why I use the Asian session range later, but so we're gonna get rid of that. Right, we're gonna get rid of this area for right now, make it cleaner. All right, so we have the Asian session range, and this is where I actually begin to take my entries right now. So now I'm gonna mark the New York kill zone session, the session that I normally like to analyze, and I'm gonna start trading more. But I marked from 7 a.m. to 10 a.m. This is the New York kill zone session range right here. Reason why? Because during this time is where a lot of the major news events for the U.S. dollar start to for the U.S. dollar come into play. So you see 7:30 a.m. we have one for the USD, 8:30 a.m. another one for the USD, right? If I was trading SPX, which is another pair I like to trade, the index market opens at 9:30, so around times of like 9:30 is where you can anticipate to see more volatility coming to the market, because that's when the index market opens. But I'm gonna focus on gold, as I said earlier. So from here, right? So from here, 15-minute time frame, immediately, what do I see? In the London session, right? The London session is like 2 a.m. to 5 a.m. somewhere around that time frame, but anywhere from like 2 to 5 a.m. in the morning, U.S. time. That's the London session, and I want you guys to know that like all these sessions, they all form moves within one another to create moves for the next session or the session that's overlapping with it. So in this case, from 2 a.m. to 6 a.m. this move right here, this bearish move right here, right? This bearish price action right here created a fair value gap, right? A fair value gap in the London session. So this is an area of interest, right? And look exactly what happened when price came back to that fair value gap that was formed in the London session. In the New York kill zone session, the time that I like to trade and that I've been back testing and analyzing pricing like the past month or so, past 2 months or so. As you see, price came and tapped into that area around at first 8 o'clock. So an hour into the trading session, we came and tapped into the area, and we had our reaction and we headed lower. So you can take it on the 15-minute. If I would have took it on the 15-minute, this is how I would have the trade set up. Stop loss going above here, and then I would have been targeting. A target can be the sell side liquidity here. It can be that. Give me a 1 to 3, or I can target other areas within here. So if I would have targeted, say, down here to this order block right here for a 1 to 2 risk to reward, or I could have just held a trade throughout the day. You see right here we have a 1 to 2, so that's another area of interest right here. You can take it down to this order block right here. That's another area of interest to almost give you a 1 to 3 risk to reward, right? So that's the entry on the 15-minute. Now if I didn't like the risk to reward on the 15-minute, what I can do is I can scale down to the 5-minute time frame, right? See if there's any other areas of interest, or I can look to take any other fair value gap entries that form on the 5-minute time frame, right? So also another thing I want to point out is whenever you see price action like this, like right here, you see we have a whole bunch of like bullish candles. Like there isn't any, not bullish, bearish candles. Right here we have a whole bunch of bearish candles. We don't see not one bullish candle in this type of price action. When you see price action like this, a lot of the times this indicates a shift in market structure. So in this case, on the 5-minute time frame, this is a shift in market structure, because what did it do? Price came and took out this key low right here on the 5-minute time frame. Right, came and took out this key low right here. Price came and took this out, headed below the body, even the wick. I normally like to use the bodies, but whenever you see price action like this indicates a shift in market structure. So I like to pair this with a fair value gap. Oh man, double confirmation, man. This is the ideal good setup to take. So with that being said, on the 5-minute time frame, right here, you can frame the trade up like this, or I can frame the trade like this. In this case, it didn't come and tap into the area, but from this standpoint, I probably would have took the trade here, because this is a fair value gap right here. This is the only area where we see a gap in price, and as you can see, price came, filled the gap, headed lower. Right now, there's a little gap right here. However, I've noticed that like the larger gaps are the ones that tend to get filled, right? So although we have a small, teeny tiny one right here, I normally pay attention to the ones like the larger imbalances, because those are the ones that are most likely to get filled, because they have the largest range like of price action. So honestly, still frame the idea up the same from the 15-minute, although I probably would have had a different target area. So I would have targeted just above the fair value gap right here. And we can target, like I said, I probably would have targeted areas right here. There's some sell side liquidity right here, a lot of lows or a lot of price action right here. So we came to this area, or you can also target this area right here, right? You just have to be mindful of moving your stops and securing profit on the way down if you're going to hold the trade. I probably would have just let it run right? Probably would just let it run. I would have took some profits off of the table first and just let it run and do its thing, right? So if I was just targeting one to two of these lows right here, then I would have been out of this trade. Let's say just a 1 to 2 exactly on the dot. I would have been out of this trade around 12:10. So 12:10 p.m. I would have been out of this trade. Would have entered at around 8 o'clock. So for 4 hours, I'm in this trade, right? And boom. So yeah, there you guys have it. That is my review of gold. So if you enjoyed this video, please leave a like, subscribe to the channel, and yeah, I'll see y'all in the next one, man. And peace out.